Renting a home in the current market probably sounds like an easier option, doesn't it? But the truth is that there are way more factors at play than the current pricing and interest rate when it comes to deciding whether you should buy a home or sign a lease. Let's break down what you need to know to decide what is best for you. Hi, I'm Bethany, and I'm a realtor with Keller Palmetto. I've been helping my clients accomplish their real estate goals for 18 years. And now I'm here to teach you what you need to know about buying a home. So hit subscribe, sign up for those notifications, and keep listening if you want to make your home buying experience a lot easier. So first and foremost, let's get really clear that the answer to this question is going to be different for everyone. Buying a home is a highly personal decision, and it should be based on lots of factors like your individual financial situation, current market conditions, and your personal short and long-term goals. Making this decision requires a mental shift in the way you think about the factors that affect your home buying decision. And I'm going to talk to you about those mental shifts. It also requires two other things. The first is being very honest with yourself about your current financial situation and your financial habits, because those are indicators of your financial future. The second is working with a quality and trustworthy, experienced real estate professional. You will need their expert advice about what is going on in your market. That agent will be able to help guide you so that you can make the right decision for yourself once they understand where you are financially as well as your short and long-term goals. So let's dig into this. First, we want to think about how much are you willing to lose? You've probably heard that interest rates have increased this year. Even though we still have rates that are lower than the historical average, it has been a big shock to see rates jump faster than ever before. And most of us surf home listings online, so you've no doubt seen that prices have increased over the last couple of years too. So then you start thinking about that higher rate and you tell yourself, gosh, I really cannot lose more money every month because of how much these rates have gone up. And you're listening to sound bites from experts that say that prices are going to fall again, and you start thinking to yourself, well, I don't want to lose money in value if prices go down. I know you're saying to yourself that renting is just easier until rates or prices come down. And there is a ton of fear about how much money you're going to lose. Here is the truth. No one knows for sure where short-term rates and prices are going. But we do know historically that over the long term, home values increase. And rates have historically been higher than what we are seeing right now and over the last 2 years. That's the data, guys. No matter what has happened economically or politically here and abroad, over time, home values appreciate and interest rates have been higher. Guess what else has historically increased? Rent. So now it's time for us to make that mental shift here. I know that you're concerned about losing money, and it really is a valid concern. So here is the moment of truth about that fear. If you're renting, you are losing money, period. So now you have to decide, how much money are you willing to lose? Most people go into renting thinking, okay, this is the right or best decision for me right now. And they go into this thinking this is a short-term decision. There are absolutely reasons why it would make sense to rent short-term for maybe a year or so. But please hear me out, guys. Year after year, the combined effect of the decision to rent is expensive. In February of this year, the average rent across the entire United States was $1,322 a month. So let's do the math on that. Over a year, that's going to be $15,864. 2 years, $31,728. 3 years, $47,592. Over 4 years, $63,456. 5 years, that's $79,320. Let's jump to 7 years at $111,000 $158. Let's shift that on to 10 years. That's $158,640 of rent paid during your tenancy, just based on today's average rent of $1,322. And that number is going to increase over a 10-year period. Y'all, this is a lot of money that you are just flushing down the drain. And let me tell you, it is flowing right into your landlord's pocket and making them richer, because you're paying their mortgage for them every single month. You are building their equity for them while their property values go up and their loan balance goes down. So why would you not invest that money into yourself? Before you decide, I want you to do this exercise with the average rent in your own city. Google it, calculate it out, because that is going to be the result of your decision to rent. You do not want to be stuck renting long term. Make a plan with smart goals that will get you out of renting and into home ownership, and start investing all of that money into yourself in your own future. Drop a comment in the box and tell me one step that you can take this week to get yourself out of this trap and into owning a home. So let's talk about what else you lose. When you rent, you also lose out on any appreciation of the home's value. And depending on the market, homes can appreciate for thousands of dollars every year. Another monetary thing that you're losing is the ability to write off your loan interest that you pay on your tax returns. That is a significant deduction for filers that are homeowners. And that deduction reduces your annual income tax liability. You also lose the ability to ever turn that home into an investment property one day. You do not own the home, and your lease terms probably are not going to allow you to sublease and rent the place out. If you owned where you live, you could choose to turn your home into an investment property whenever you're ready. And that also means you get to start cashing in on that landlord payday for yourself. Here is our next mental shift for this decision. How much are you willing to invest? When you own a home, it's an investment. You're going to spend money on it, but you're not losing that money. You're investing it into this property that you now own. The reality is, homes cost money. They cost time and they cost effort to maintain and increase their value. There are moving, working mechanical systems in the home that require maintenance and upkeep, much like your car. And sometimes these systems break, or they need, a replacement instead of just a repair. Other times you may face dealing with other maintenance and repair issues that could be just minor handyman expenses, or potentially thousands of dollars if it's something major like a roof. It's recommended that you should plan at minimum to save 1% of your home's purchase price every year for maintenance and upgrade costs that happen over time. This is something you should be planning to do regardless of what home you buy. The question of how much are you willing to invest, that does not mean that you can't buy a home, but it does mean that the answer needs to guide you in deciding if you're ready for this financial expense right now. And also it should guide you in what type of homes are going to be the best fit for you. If you don't feel confident in your financial ability or willingness to put a lot of money and energy into a home's upkeep and maintenance, looking at old homes is probably not going to be the right option for you. Looking at a home with a 15-year-old heating and air system and a 25-year-old roof is probably not in your best interest. Instead, you should consider new construction or a resale home that is, maybe only 5 years old at the most. This way, you know that it is likely going to be quite a while before major work or replacements will be needed, and you have more time to plan and save for that. How much time are you willing to invest in your home? The longer you live in it, the greater your chances are of property values going up and increasing your equity in the home year over year. So that one day when you do go to sell, what you owe on your loan is substantially lower than what the home is now worth. And you can take that profit when you sell it and you can roll that into your next home purchase. Speaking of investments, since you own your home, you now have the option to make your home an investment property one day. Or maybe you even do that now, and you can turn that home into a moneymaker for yourself. What could that do for you and your family one day? I want you to think about that and drop me a comment below, because I want to know, how would you spend an extra paycheck every month from your rental income? And now we arrive at our last mental shift. Real estate is local. Stop allowing national trends and national experts control your decisions. I will say that again. Real estate is local. Align yourself with an experienced, trusted real estate professional where you live. Someone that cares about making clients for life and really loves working with first-time home buyers. Allow them to explain to you what is happening locally right there in your city and how they believe that is or is not compatible with your short and long-term goals. There could be little areas and pockets of your city that are really still poised for growth that might still have great opportunities to buy. Let them refer you to a local lender who will crunch the numbers with you, and together y'all can come up with a plan about what the right buying situation looks like for you personally, because it's going to look different for everyone. If you need help finding a realtor in your area, comment agent below and I will help you find someone in your market who's going to be your real estate rock star buying your first home. Overall, the market can feel really scary right now, but buying a home is still a better investment for many people as opposed to renting. If you're leaning toward buying, but maybe you're feeling like there's still too many unknowns, click the video on your screen now and I'll clue you in on a few things that most people don't know about buying their first home.